Yo, yo, yo. What's up, guys? Travis, Nana, Ape, A-Man, Ortiz. Amazing Blue 2. Love Got a Neighbor. What's up, man? Joe, hero of the day. How's it going? Manny. Yeah, we're doing it. Yeah, it's been a minute. For sure. Yo, Marth, appreciate that, man. Appreciate the 2. Hey, you. How to do? Oh, man. It's good to be back here. Yeah, it's been a while. So, and, you know, part of the reason why I say this a lot when I come back on these long breaks, but I mean, the chart is stagnant. We know that for sure. But I'm here to, you know, talk about the cycle, man. Talk about this stagnant, these last couple cycles that have been pretty flat. Here to kind of talk about it all, man. We're gonna pull up the scanner. I'll talk about crypto, why crypto is a good thing happening right now. We got Bitcoin at all-time highs, man, getting ready to break that 100K range. I think that's awesome, and I think that's awesome for the meme. So that's why I'm going live, man. Just want to update you guys, but this is a patient play with potential, obviously, and it's still holding, man. I mean, it's not showing any signs right now. It's very neutral, right? But it's not showing any signs that it wants to continue distributing. So at the end of the day, the stock looks good to me. It's just a very, very, yeah, it's just one of those stocks where it's like you got to be patient for it and wait to see what it's going to end up doing at the end of the day. And right now, man, I think things are setting up to do something. So we'll talk about it, man. We'll talk about it. All right, my volume is low. I agree with you. Let's see. Yo, yo, yo. All right, let me know, guys. Is this better? Is that a little bit louder? Yeah, man, Pepe, I mean, the entire crypto market right now is pumping. If you guys were here, I mean, if you've been here, you know that we've been pulling up the gold pattern on Bitcoin. We pulled up probably a good year and a half ago, and we'll come back and talk about the tracking here, but just real quick, I'll show you guys the projection, at least, that it has right now and how it's tracking, and we'll kind of come back to this. But here is that gold pattern, right? We started tracking this way back over here in April, and you know, we talked about the liquidity and dude, even back, you know, we asked ChatGPT, like, hey, what is the market cap, like, comparison, right? The market cap comparison between Bitcoin now versus gold back in the day, when, and also accounting inflation, and it said that the high was a $1.2 trillion market cap right here, which is what Bitcoin's market cap was when it started to dump, right? So yeah, I don't think this is done. I mean, I think this is going to go probably all the way up to 300K as this pattern is calling for. And yeah, man, 100K is a psychological level. So this right here, guys, this is like the 4-year cycle that Bitcoin likes to do. And back in 2021, right, the memes ran when Bitcoin was basically when Bitcoin was trading right around here. It crossed at all-time highs. You got January, and then everything in the market starts to squeeze. So yeah, definitely opportunity for a lot of stocks in the market, especially the ones that have not broken out of accumulation. And there's a lot of stocks that are still trading in accumulation. And most of these, the cryptocurrencies and other stocks that are in advancing, like MicroStrategy and NVIDIA, like these guys that are trading at all-time highs, they'll probably continue to rally and really thrive on this advancing stage that they're currently in. But yeah, dude, Bitcoin doing this right now is, in my opinion, like one of the best things that can happen right now for the memes. And yeah, for the memes and for the rest of the market, man. So I got a few things. I also got the all-in-one indicator here pulled up. I want to look at this stuff throughout the stream. So this is a daily, like intraday chart for what the market's doing. So we got Sava right here, right? Sava's currently kind of beating the market. And then, the times I do pull this up is just to show you guys how stocks move intraday. It's an indicator on TradingView. It's just how stocks move throughout the day. And a lot of the plays that, the plays, say intraday plays, trying to get in and out, this is a really good way to spot volatility. So, like spotting even like AMC breaking out yesterday, you saw it kind of going in and out. AMC's here in red. Same with GME. And yeah, it's just a good way to see what the entire market is doing and how liquidity is moving intraday. Because we know, guys, like we know that all this liquidity in the market is being pumped and dumped, right, between stocks. What best way to do it than to pack all these stocks into one indicator, right? I have 200 stocks, man. It's crazy, but I have 200 stocks here, all packed in one. That's why the screen's a little bit choppy, but you can see it right here. There's 10 different indicators in one because they, for whatever reason, only allow 20 stocks per indicator to scan. So you kind of have to pack it together, pack it all in one. I got 200, bro. 200 stocks here that I get to track every single day. And look at the breakouts, man. The little breakouts that are happening intraday. Like we got right here is Peloton making a move back up. I'm on the minute chart. We have Sava making a break back up again. Right here we got HIMS. On the lower part we got MicroStrategy, right? So very, right now, the crypto space, a lot of volatility. So you're going to see these guys go up and down like crazy. All right, but that's that, guys. I'm coming back and forth between the market. So this stream, AMC, stocks, crypto. Just want to talk about the whole deal. So we'll start with AMC, and I'll kind of make my way around. Talk about everything else. Okay. So right now, okay, there's a few things happening with AMC. So the first thing I'm going to talk about is the cycle. All right. So I've been getting a lot of questions on X, on Twitter, about updating the cycle and what's going on with that. And one of the things that I keep telling the Discord, we go over this stuff every single day. But one of the things that I've been pushing out is that they're currently right now, and with the cycle that we've been tracking, these volatility zones. Okay, so there are two cycles that I'm tracking, right? We have the OG cycle, which is this guy over here. And then we have the new cycle, right? So it's this guy. The new cycle is something that is right now a little bit more of a theory than how consistent and how consistent the older cycle that we've had has been, right? Because there's a few things that we have to take into account when it comes to like cycles, right? And here, what I'm looking at is the split. The split is going to be what determines whether this new cycle is more valid or has, more validity than the other one. And there's really only two things to watch out for here, right? So we have, the first thing is the starting point in the cycle. If you take the old cycle, the starting point is different. It's about a month behind. So if we use that cycle, there's no clear correlation here yet because we've only experienced one POI, and this is the only one that we have in what we believe to be this cycle, right? So the starting point, based on the split, kind of makes sense for two reasons. So not only do we have the split here, but we have the conversion back, right? We have the ape shares converting back to AMC. So what happens, right? The option chain resets. Now the option chain reset twice. Reset right here, and then it also reset in August of 2022. So this might be part of the reason why the cycle started to behave differently, right? When everything started to dump, right? We didn't see as much consistency anymore, and the cycle was behaving very neutral on most POIs, including this one right here, which is the only POI in the entire chart that we know of that played outside of what was the cycle, right? So this has a lot to do with, well, this fake out that got shut down right away, right? The algorithm said, yo, I'm not in on this. Let's shut it back down and bring it back into the cycle, into this flow. So with that, right, if we have this as the starting point, this becomes the new cycle then, right? This is the 62-day cycle that we are using. Now this is where it becomes a little bit tricky as well, and why there's not as much consistency, because the way the cycle is made is, so we're not just using the starting point of the split here, because there is a range that we track, and that range is 13 days long. So until we get the next POI, we won't have that information. We just have a range that we're tracking. So again, I'm using the starting point of the split, but if the starting point is plus or minus 13 days, then that range does change a little bit. And I'll show you guys what I mean by that. But what we're going to do here is we're going to take the entire cycle, we're going to duplicate it. Okay. And then the plus or minus 13 days that I'm talking about here is based off of the only POI that we've had, the starting point for that, right? So say that the starting point for this POI here is in May, right? Say that is which there have been cycles, the majority of them play out right in the middle, but there have been a few cycles that play out right away, right? So if this plays out in the middle here and you go back to the current cycle, right, that's pretty much telling us that we're still in range, that we're still in the POI range. It puts us right in the middle. You can almost see the projector developing right now, right? But if, say you go back, right, plus or minus 13 days and you put it right on the peak, well, then that's telling me where it's currently trading at, I have it the furthest back, that this is the peak and that we're no longer trading inside the POI. So it all depends on where that starting point is. That's the most important thing here, figuring out this cycle, right? I keep saying this, guys, but the moment this next POI plays out is the moment that will have a more consistent cycle figured out. So if it starts playing out right here, I'll know that this cycle here is definitely more valid than the previous one that we were tracking. And then, you move on over to that with the knowledge of knowing that the cycle basically ended once the split happened, because again, the option chain is reset. It just makes sense, right? There's no longer that much liquidity with options that are basically worthless, right? That there is no demand for, there's no volume for, especially if they keep the price suppressed, right? It would be a different story if you have a squeeze happening while those options are in the money, right? Because then you could technically still exercise those options, so it doesn't matter as much. But when there is volatility happening and there's a new option chain, majority of retail traders are going to be buying the new options, not the non-standard options, right? So that's part of the reason why I believe that the cycle here is reset, and we're starting to track this new cycle here instead of the old one, right? Okay. All right, so that's that. I know it's a lot of information to kind of unpack here. With that, man, that is what we've been tracking here for. And, I've been pretty brief with it. Even on the last video that I posted, I've been pretty brief with this sort of new concept here on AMC. But it's just one of those things, guys, that just checks out. Now, if you track like larger cycles, it's a different story, and this is where I'm going to get to the fractals, right? The fractals that we're going to be covering here, and then I'll talk about the projection and everything like that. But fractals are the next thing, and this is where I'm going to pull up the ARPA pattern that is just super consistent here in the way it's been tracking, right? The ARPA sequence. So this right here is like the most accurate chart that we can really compare between, and when it comes to not only the levels but the POIs, right? Every single POI that has ever happened on AMC, right, from November of 2020 has hit like to a T, with the levels also hitting. But when does this pattern kind of stop tracking a little bit, right? As soon as we have the option chain reset. This is the last time that we saw the levels track, right? Even the POIs a little bit stop tracking. So it doesn't give this pattern like complete, it's not like completely invalid now just because, it stopped tracking the levels. But it is a good pattern to track in the future, especially when it comes to this basically almost 3 years of stagnant pressure here on AMC. Only one volatility zone that really hit, well, two, right? If we consider the split here and the inverse squeeze, basically. That's also very important to track. And up to that point, guys, look at this. This right here is what I'm paying attention to. This is what I've been kind of waiting for here for next year, because, yeah, it's got basically the next spike here and exiting accumulation, this massive, like, period of just trading sideways. So this is what I'm paying attention to. I think this is what's going to give us a lot of information, I think, going into next year and then the years after that, in where AMC could potentially go from here. Obviously, you don't want to see, and these are things that you have to consider as well. There are a lot of stocks, right? And I wish this, to never happen with AMC, but it's also something you have to consider, right? We only have so much. You can speculate all these things, but you always have to have them right in the back of your head. If they do another split or something like that, that's not a good case, right? At the end of the day, another split in this short amount of time, especially when you're trading at, the $4 range, it's just not a good idea, right? If you go back into the dollar range and you do another split, that would make more sense, but also it doesn't look good for the retail trader who's in on the stock, right? Because they're constantly being diluted, and it's like, it just is not a good look for a company, in my opinion, right? So, you really don't want to see that. I understand sometimes if they do more dilution with offerings or stuff like that, that's a better case. but definitely do not want to see another reverse split. This should be the last one. Okay, so now with that, we'll talk about the projection here and what I see happening based on the narrowing down here of the POIs in the short term and also in the macro, right, in the long term. All right, so one of the things that I can kind of narrow down here is the POI here is a range, right? This pattern is a fractal, guys, so that means that it's very sensitive when it comes to the timeline, the time frame. I would give it, for like a macro POI, for something where you see this thing like actually go. Anywhere in this range, I think, is acceptable, and that's really between February and like May, right? So it's about 3 months of a large macro range. This is good to track going into next year because of all this volume that we're seeing on this fractal. And it's not only the ARPA sequence that we are tracking for this, guys. This is one of many reference patterns that are calling for like a bigger push here. So now we start to get into the one-to-one patterns, and these have more. I trust these a little bit more because, you know, we're not just looking at a fractal or in this case with ARPA, it's the premium chart of ARPA on like the intraday back in like 2022. But we're looking at a stock that has already done this before, and there's a few, right? There's a few stocks. So we have, for example, we have Sava. This is a 2-year stock right here of pattern, right? And not only do we have the levels hitting here, okay, so we have, this is Sava, guys, 2 years. We have the POI that AMC had. It played out earlier on the Sava chart. You can see it right here. It did the same thing. It got shut down the same way. And for AMC, it played out a little bit later, right? So in the sequence, AMC wanted to do this, about 3 months later. The good thing about these patterns is that normally whatever happens in accumulation could be scrambled up, right? It could happen right away, it could happen later in the sequence, or it could happen in the middle. With AMC, it happened in the middle. But normally these have a good outcome from the macro POIs. And in this case, we have two. We have this one, and we have this one right here. There's two macro POIs. And where does it lie, right? This is right in between that range on the ARPA sequence. This is one pattern of many, right? We have Sava. We also have this guy over here. This is SMMT, okay? And this also has a macro POI in that range, which would be a little bit after. Now, they all have, right, they all have their own sort of end goals at basically reaching that $40 range. Most of them do that. But the good thing about all these patterns is that most of the levels here are hitting regardless, right? So this one here has a little bit more correlation with like when the POIs happen, but not as much correlation with the levels, right? Sava has a better just overall correlation with that. And yeah, man, they're all basically saying that AMC would trade sideways for about 2 years from the starting point. It's about 550 days is the average for these guys. So yeah, that's something to like consider here, right? Because AMC is holding up pretty well. I mean, it's not the fact that they were not able to take it down below on the micro chart. They were not able to take it down below the $4 range. I think is a really good sign here for the short term, right? For the short term chart on AMC. And then this is just, guys, macro analysis here based on reference patterns. Very good stuff to track. I mean, it's the same thing that I did for the Bitcoin thing, right? We tracked Bitcoin versus gold back in 2022, and it's been tracking ever since, right? It's been tracking to a T. We also been tracking for SPY, right? For SPY, we've been tracking using the spots indicator, which is These are just macro projections, guys, that that we've been doing here. And copy Pat, where is it? Right here. Okay, so copy Pat doing the same thing. This indicator basically takes the fast Fourier transform, historical data, and basically spits out a projection based on that calculation on what the market's going to do. And you know, this was posted in 2022, basically around the same time that we were tracking that gold pattern on Bitcoin, and again calling for the upside here up until this year, right? Which is we're trading way up here, right, in this range, but it gives you a projection based on what the historical chart is telling you, right? And the more you zoom out, this is on the weekly chart, right? The more you zoom out, the better it's going to be. You're going to have more data, probably more consistency as well. So yeah, these are just the little things that where this is why I pull up these reference patterns, why they're so important to track. It's because at the end of the day, guys, the majority of the markets, they're going to follow a sequence. Their big money is going to control the way that stocks move in the market. They're going to have at least a lot of influence on the way that the charts are moving. And if they are making the amount of money that they're making, right, there has to be some kind of structure, some kind of guideline, blueprint, right, that they are following to make the money that they're making. So it kind of checks out that things are somewhat predictable, right, in the markets. They kind of have to be if there's a large entity, right, that is having that influence in the market. Or else it would be random, and I don't think anybody would be making money, right? Somebody's got to be making money. So that's kind of the outlook here. At the end of the day, right, that's going to be and will always be a you can call it a conspiracy theory or whatever. But I like the odds, right, man? I like the probability. I like the consistency, and I'm good with that. I go based off of that. The facts never have to be 100%, and they never should be treated as 100%, man. In the markets, you always have to be a little bit skeptical on everything. But I like the odds on the cycle theory, man, and just the whole outlook here. And, you know, if it's working, man, you go through, you keep doing it. You keep doing it. Okay, so cool. With that, let's talk about the micro charts, bro. The micro charts, these are the crazy ones. So if you just got back in on the stream, go rewind all the way to the beginning. I'll talk more about the cycle there. But I want to pull up these micro charts because in the short term we do have the POI in this range, and it technically does go and stretch out until the end of the month if the starting point is earlier on here on this POI, right? That's the good thing about the current cycle. Now there are patterns here that are backing that up. For example, this one, right? This one right here, if you take it from POI to POI, it basically has AMC going up very soon. And what are some things that look very similar on this chart, or why is this pattern here so attractive, right, in the way it looks, right? You don't see the same levels being hit, right? Like, you don't see this thing spiking up and getting shut down because this pattern down here did not have the same volatility that AMC did. And this is why we have to round things out. You have to use a smoothing average on AMC, right, the SMA, because then it's going to give you a better correlation with just an average on what the stock is doing. And this right here just looks like a classic reaccumulation pattern, right? All it's doing is it goes up to a range and then it stays right in the middle. This is reaccumulation before you advance, before you keep going up. So one thing I do agree with is that in the short term, okay, regardless of whether we follow these shorter term patterns or not, is that AMC will, if it's bullish here, if the trajectory holds and is bullish, I think what we're going to see is a push to the upside and I think AMC is going to go very close to the $10 range, and then it's going to enter another reaccumulation phase. So I think majority of patterns are calling for something like this. What this does is, so these guys are trying to hedge, right? If you're going to go up, they obviously have a stock like AMC and GameStop where they love to pump these very quickly. So it's possible that in the short term we might experience a very quick pump as well, because they've had enough time to really just keep this thing stagnant, right? It's been trading between 425 and pretty much 5. I mean, honestly, guys, even these smaller pumps right away, there's still a lot of premiums are still very high, so it makes sense that they're able to bring them up to a larger price range. But when the premiums start drying out, they really want to keep it as tight as they can until the next volatility zone. And in this case, if we do experience another POI, I would expect this one to be about 100% or higher, because the threshold has now changed. It's not the same as it was before because you're dealing with lower price ranges, right? We know that by using the changes indicator, we can see that very clearly. You can use an ROC indicator. It's right up here. Okay, we use the 13-day cycle. You go on the daily chart, and then this is going to tell you that, right? So we got AMC here in 2021. This is where the old cycle, how it was running. And then, I mean, honestly, you could treat it the same way. Once it exits a cycle and it starts trading somewhere else, in this case, we would say on the split, you could start tracking a different threshold. Not only do you have AMC trading at these lower price ranges where it becomes more attractive, but when you're trading at these lower levels, you're going to experience more volatility, especially if you're slow on the way up. And there's going to be higher spikes. And right here, you can see what I'm talking about, right? So it crossed the previous high, which was in March of 2022. And then right here, our average was 70 for it to, because we never experienced really higher than that 70 mark. That's why this was the threshold that would make POIs here positive or neutral or inverse, right? So that's part of the reason why the threshold here has changed. It's no longer 70. If we're going to see a POI here, it's more likely that we would experience at least 100% push. And, you know, that's what these patterns are calling for, right? They're calling for a continuation and 100% push. Right here, it would be right around the $8 to $9 range, even 10, because that's a threshold. And again, this pattern here is just giving us a range, but it's not giving us that high candle. So AMC got shut down very quickly. It's kind of the same scenario here. As long as the POI hits, whether it's in the after-hour session or wherever on the daily chart, if that hits the 100% mark, it is valid, right? It's a range, obviously, so it could be 90, it could be 150. I mean, it could go higher if it wants to. But ultimately, this is what the guidelines are right now for, I guess, this new cycle that we're tracking, or the way that I'm putting it based on. But the more information we get, man, the easier it's going to be to kind of crack this thing down. That's one pattern. We got this guy right here as well. Okay. And this one, it's one of the things I forgot to show you guys on the last pattern too, is why I like this pattern is the structure, right? So we have a few things here we can track. So we got a low here, which matches to the low. This double bottom setup right here. We have the POI, the macro POI, which hits the T. That's 3. Everything else kind of wonky, not so much going on. But then you got the low. this right here is probably the most important part, and what makes this pattern here an attractive one is that the low range is basically the same as AMC. When it hit the low, it never came back, right? In this range, this is that quick spike, right? Started to climb back up, and then right here is where it starts to go crazy. It just starts to basically squeeze. Some other things you can kind of consider with this too is the fact that on these POIs that we track, AMC has a track record, and it's a good one, of going up, and this is considering that we're in a new cycle, okay? So that's like part one. You could say the same thing about AMC in 2020. When it entered 2020, it was already trading in a new cycle. I mean, look at this right here. Look at AMC is stagnant up until 2020. You experience major volatility. So that's like, boom, right there, a new cycle. Starts doing its thing, right? Similar to what we're doing now, accumulating. And then on that first major POI, not even the one in November, right, is where we experience that 1,000% push or higher. And if you look at the chart now, right, it's basically this entire section here. AMC, this would be the first time, right, following this the May pattern here. But if you look at the cycles here, they're back to back. So this goes up 100%, trades sideways for 120 days, and then goes up about 700%, right? So these things are things we have to consider for AMC right now in the current chart, because it's also been, you know, stagnant trading here for a while, and it's getting ready, hopefully getting ready here to push back up. Now, one thing that will invalidate this, and this is on a lot of patterns, right, on a lot of short-term patterns, if we did, and I'll talk about the worst case scenario here, but if we did experience a inverse POI here and say that it goes down to $2 or something, or goes down lower than that, there are some patterns that are calling for that. This one right here is a bullish one. It's also 1-to-1. It's called LKCO, also calling for a POI here soon. But there's one pattern that is, you can clearly see like the inverse POI here, and it's this one right here in red. Now, the thing that I like about this, though, is that it didn't do that over here. Every POI hit up until this point. This one I would just be tracking the levels, all right? I wouldn't be tracking anything else. But if you kind of had to look at it from a, you know, some algorithms just slow down or speed up in certain phases. If this were like slowed down, I would be tracking the levels of this one in hopes that if it was inverse and say it did come down, that it would spike back up. It would start climbing back up after it did that, and we didn't have another split, or we didn't have any of that. Because cycles will do, you know, they're going to do their thing, but the administration kind of decides whether, you know, at the end of the day, what the end goal is, right? If they're going to do another split or anything else to try and dilute the stock, it wouldn't look good in that time frame. You would kind of have to wait and see what the stock does after that and go from there. But we're not there, man. We're not there. I'm just, you know, I bring out the worst case scenario every single stream. You know, I'm skeptical, man. I'm skeptical about on both sides. You got to talk about both sides. You got to talk about the hard stuff, because, you know, we are where we are now. AMC has fallen a lot, but, you know, you look at the upside from here, and there is a lot of potential. Also considering that a lot of these stocks in the past have done the same thing. I mean, they came down to all, you know, to these lows and have turned around, have had a strong bounce, strong push to the upside. So yeah, that's that. And you know, back to this whole thing talking about when AMC entered this new cycle here in 2020, right? So it was stagnant for a really long time. It entered the cycle. You started to experience volatility, and then it just went up from there. And that's kind of the same thing here. You reset, you trade sideways for a long time, you start to get, hit these volatility zones, it starts to, look good for the long term for AMC, right? Uh, so here's a correlation now with the market and AMC and crypto. And this is like, you gotta look at this at the end of the day. I mean, I was waiting for this break on Bitcoin and the tracking that we did for Bitcoin and gold, because this obviously makes the case better for AMC. I mean, look at this. Bitcoin's about to hit 100K, right? This is the best case scenario for the memes for everything, because there's so much liquidity being traded in the markets. I mean, they can't just use crypto, right? They gotta use some meme stocks, or they gotta use something else. Whatever it is that they're using in the market is going to play, it's going to play a big role here in how the markets are functioning, how, what the markets are doing. So that's what we're going to talk about next. We'll talk about that. Let me read the comments real quick. Say hello to my friends. Trevor, how you doing, man? All right. Evelyn, Lino. Yeah, so awesome. Glad to see you guys back in here, man. Chilling again with the squad, doing it. Let's get to it, man. Let's get to this correlation here. Now we're going to do a correlation analysis. We're going to use 2 indicators for this. And I'm going to take away these guys. All right, so the sector analysis is understanding how and when certain markets with volatility pump. Now, the reason why I'm not using this indicator here, and I will use it in a second, but this indicator here, all in one, is going to be good at showing us stock historical correlation of individual stocks, right? Like I want to see what each stock is doing, and then potentially use that pattern for current stocks in the market. This is really good at doing that. This other indicator here, the sectors vortex, I've split into 5 groups that I think are very important when it comes to the memes and just the flow of high liquidity stocks in the market. So this means the memes. We got the green rush here, cannabis stocks, crypto crazes, like Mara, all these smaller cryptocurrency stocks, now that they are growing and they are heading into like the mid-cap territory, or they are currently in the mid-cap territory. And then tech disruptors, which, for example, a stock like Carvana now is definitely trading in the higher market cap compared to these other guys here, Roku, AI, Upstart. But it was here from the start because it was once, right, a smaller cap stock, and then it turned into a mid cap, and then now it's really just on the verge of crossing all-time highs again. But here, this is a good way to understand what the markets are doing and basically whose turn it is in the cycle, right? So right now, we obviously have the crypto craze. I mean, they're the ones that are leading the markets. You can clearly see that. AMC, GameStop right here, May 2024. Very clear in how we see that as well. But if we come back, the only ranges I'm really tracking and for correlation here is going to be right here. Everything that's happening in this range, I think, is important to track. And tracking the levels is going to be even more crucial because of how liquidity is being pumped and dumped. Right, so here you can see the meme. The memes were obviously ahead of the market even when it was coming down. It was coming down here, and you saw like GameStop was like squeezing, and then everything else was dumping. Like crypto was dumping. You had the cannabis sector dumping, and you kind of have a similar effect happening right here, where it kind of dumps while the memes are pumping. So this right here is already correlation. It's good correlation. Everything kind of comes back, starts trading in the same world, because we know that markets will trade very closely together when they're either in reaccumulation or redistribution. They're going to trade in a very similar range. Right here, prime example is as soon as AMC dumped in November 2021, the entire market basically started to trade together. I mean, there's like very little going on right here, not a lot of liquidity being traded. And yes, you did have stocks pump. You did have some stocks pump and dump, but just in general, most stocks were trading 1-to-1, right? That was pretty evident. Now, everything else is dispersing now. The cycles are expanding, right? This, like, you guys have seen low-key. We talk about the timeline. What is that thing called? The fucking... We're here having a... Yo, send it in the chat. What is that thing called, bro? It's one of my indicators. I named it that because it does something similar where just everything starts dispersing, doing its own thing. It's leaving the flow of things, and that's basically what the market is doing. It's like the best way to kind of understand how these sectors are behaving and moving in the market. Right now, we're experiencing everything kind of going its own way, and I like the fact that crypto right now is above. It's kind of doing its thing, right? Look at what happened here in November of 2020. This was 4 years ago. It's the same thing. So it's in my opinion, it's a version of what happened in 2020, right? There's a lot of stocks here that are going to make this look a little bit different, right? So we got VXRT and NVAX. They're going to make this look a little bit different, but they do have a correlation of going up with AMC and GameStop, so that's why they are in the bulk. But in general, you see most liquidity being traded here in July, which if you take all the patterns here, there is a correlation. So you have crypto, or the cannabis sector go first right here, right? And that's basically what happened right here, right? So that's the cannabis sector. We can check that off. And then you have, shortly after that, and this is the correlation, you have AMC and GameStop right here. All right, so that's in red. Okay, and that's the same thing that happened right here, right? Okay, and then we also have crypto, right? And crypto is just kind of trading in that reaccumulation. It's going down, it's creating a projector, which is right here, and it does it first, but it takes longer. It's just a longer version of basically the same pattern. And then right here is where everything starts to pump. We're really only looking at 3 sectors right now. The other 2 are just that there's just more we can look at. It's better, the more you have, the better. But right now, I'm basically just focusing on the first 3. They're going to be the most important ones. And yeah, man, they're all doing a version of the same thing. This is something else I'm looking at here for this macro cycle on AMC and GameStop. Another thing you can do, and this is on the same sectors. At the end of the day, man, if there are sectors that are pumping at the same time, you got to use that liquidity as bulk, because on the micro, these guys are going to trade against each other, and we know that. We know that. For example, NVAX started to pump first, and then shortly after that, you saw a small dump, and kind of see how that liquidity is being traded against, AMC and GameStop as well. They're now 1-to-1, but if you're looking at the macro trajectory, they're both pretty much on the same route. They're and that's also taking into account the split here and everything. Yes, it's doing its own thing. The stock did go down a lot. But if you're looking at the movement between these POIs that happen, they happen very closely together at the same time. Okay? So watch this. This is where it gets interesting. Now we're just looking at the memes. Right? We're looking at nothing else. If you're looking at just the memes, what happens before stocks start to climb back up in cycles. Okay, and treat this the same way as a chart. Okay, but this right here, I mean, you won't see it on the AMC chart or even on the GME chart as it's showing down here, because, well, this indicator is really good at kind of hiding all that. It's an ROC indicator, rate of change, and it's going to smooth everything out on this threshold line here, so that it, on the chart, it's just going to be declining, even with the splits, but this is going to take all that into account. Really just focus on the volatility that's happening. And it's very clear to me that what's happening here is that when we came back to a range, which was back in June 2021, which was basically the last time we saw AMC pump and hold that pump, right, on advancing. So we already crossed or got close to one level of resistance, and now we want to make that next push to the upside to complete this cup right here that's taking place. Again, you're not going to see the cup on the AMC chart. It wouldn't look like a cup. It would look like something else. But you can see that on this chart below. And some of the other stocks and sectors, right, if we were just looking at, for example, the crypto craze, is going to be distributed differently, but ultimately it's doing the same thing, right? It's going to be distributed differently, but it's doing the same thing. Here's an example of this happening with crypto, right? You go back to 2017, and it does the same thing. You have a pump in the crypto markets. It accumulates for a long time, and then what happens? You enter reaccumulation, and then you pump. So if we were using that, if we were using this sequence right here, you're not going to see it on crypto, but if we were using the same sequence here, look at that. It's literally it's just copy paste, man. It's a match. It's very clear, but they are like, this is why I love this indicator, is because it's going to show you stuff like that. If you go on the charts, you're not going to clearly see that. You got to have multiple sectors inside and average those sectors out to be able to see exactly what's happening. This also happened with in the crypto. For example, you pull up a stock like Tilray, right, or CGC even, right? All these guys, and I have all these stocks here. They've been through multiple cycles back and forth. I mean, this is a good one you can use as well, right? This is 800, 900 days of data, right? We're talking, what, 2018, 2021, about 3 years. CGC, I think, is probably even better to use. It's been around for longer. It's 2013, right? And it kind of shows you the same thing that's happening. These things pump like crazy, 2016, and then in 2021, it goes up, right? 2016, that's a little bit over 5 years where it's doing that with these cycles. And then right here, right, 2021 all the way down to 2025, another almost 5 years, getting ready to finally exit and get out of this, accumulation phase. So yeah, these are things, guys, that, apart from taking a look at reference patterns and, everything else, these are things that I look at to just kind of better support the thesis, right? Better support the thesis. Okay, so another thing I want to look at here is, this right here, all in one. All right, this is going to take me a minute, so bear with me. Wait, we might be able to do it with the 50. Yeah. TradingView does not like me right now because my voice just cracked. Nah, because I got how many indicators here? I mean, look at this. This is 200 stocks, and this is why this thing is like slowing down, right? It's like, too much. Okay, but now that we looked at, 5 special sectors. Now I want to look at 200 stocks and what 200 stocks have done in the past before. So similar to this cycle that's happening right here, you're going to see the same thing. Reaccumulation in the markets happened between 2022. Actually, 2022 was reaccumulate. 2022 to 2023 was reaccumulation. So almost 2 years where the markets were reaccumulating. And what happens here? Stocks trade closely together. There is no volatility. There's barely any volatility, if anything, in the markets. And you can clearly see that down here. No stock is going above this. There are some stocks that start to pump like crazy, right? As soon as you exit that, because they're kind of, they're making that the starting point, almost predicting what the markets are going to be doing after that. But look right here, man. Look at right here in this range. Again, what do we see? We see stocks doing their own thing. It's very choppy. The markets are they're trying to exit this average, this market average. They're trying to exit that. And we saw the same thing happen in 2021. Like, we had a period where the markets were reaccumulating. And as soon as everything started doing its own thing here in 2021, everything started to squeeze again. They're just little, subtle things to track when it comes to the cycle. These are things that back everything up. For this AMC and everything else. Okay, so just exited the stock thing here. I think it's pretty cool that they added this option thing on TradingView, but they haven't added the option, the actual quotes. So I can look at the actual quotes. That would be the most amazing feature. I think if they ever do that, it's going to be a game changer, because you can. I'm over here using Thinkorswim, taking screenshots, man, and then using those stock patterns to see what's happening, right? Stock option charts are basically just any stock that has volatility. It looks very similar. Okay. Cool. All right, let's get back to this real quick. Rasputin, you want me to go live and just stream, huh? You want to hear that Rasputin, bro? No, we will, man. We will do that. We'll do that when the time is right, bro. I'm saving it for the right time on AMC. I love to do it, man, when we see those nice days on AMC, for sure. Yeah, so I talked about the micro here and stuff. I do want to cover some other things and just kind of, talk about some of the plays that we've been tracking and looking at. Really awesome thing, guys, that happened here on. Oh. Let's see. So really cool thing that we've been tracking here with crypto. One example is Mara, right? So with Mara, and we called for this fake out here 2 days ago, but this has been the longest play on the Discord, and just want to show you guys this right here. We tracked this pattern on the 18th, so literally in the beginning of the week. We called for the fake out, and right now it's tracking to a T. Just another way to kind of see the patterns. At this point, too, the pattern can do anything it wants from here, but it has been tracking. And another thing for the Mara, just kind of answering some of the questions here I have from the Discord, but we've been tracking. I'll show you which pattern here. This guy, we've been tracking it for a while now. I'll show you guys the play, too. This is the play. Where is it? All right, gotta pull this up here. Here is the play. Oh, there we go. Have a thing that is an awesome tool, man, to be able to track these. But so it shows you the entry or the alert on the trade, and then it shows you the current price. Really cool stuff. So back in September, right, which is right here, is when September 20th is when the contracts were alerted right here. And then basically this is showing you the entire portion up to that point, right? You gotta have to like zoom in on the chart and see. But this right here, and you know, part of the reason why, you know, these are longer term plays. We call them growth plays. Because it's plays you get like you gotta be patient for, right? These plays don't just happen overnight. I mean, they take time to develop. And it's just been like it's been a roller coaster for sure. But you know, these went from 69 cents to 3.5, and I still think it's gonna go higher. I still think that because of what's happening with crypto, right? This is probably going to go up to like 45 or even the $40 range in the short term. It's what we've been tracking. And it's, you know, these are the opportunities that come with like knowing what the cycle is, knowing how reference patterns work. I mean, this play has been like, we've been tracking this specific pattern here, understanding how the cycle is doing this you know, this version of a pattern unique to like, you know, the stock you're tracking, right? So this reaccumulation phase right down here looks very different, right? We even call it this would be the start of reaccumulation before it goes into advancing. But this is just one example, right? We got a lot of different stocks, guys, that follow different reference patterns. See, this is a pattern, guys, from 2020. This right here is a pattern from 2020. The fact that it's tracking this right here is very important, right? Because basically, you know, if it does track to a T, all right? For me, I'm tracking it till it gets to the 40, even 38, 40, 45. Would be tracking it from there and then seeing what it does after that, because a lot of patterns end up flipping, and this is the same thing that happens with AMC. Every single time, you know, we get close to a POI, a lot of them have just been stagnant. They've been neutral. It's not about calling for volatility to happen or that it is going to happen. It's about tracking the opportunity window. That's it, and that's all we do is to track the opportunity window for AMC. AMC is also the hardest stock, one of the hardest stocks to track on when volatility happens. I said this on Twitter too. Is that's the reality of it, is because it's so it's controlled like to the max, man. For these guys to be able to really put on their when they're going to do it, right? But controlled in the sense that, well, if they have enough liquidity to pump it and then dump it back down, that right there is going to give them a larger window to trade it sideways. And I think we've learned that over the years. But also, the opportunity window typically is not something that we have seen shift to where, you know, wherever they would like, right? You could typically narrow that window down to a degree where it does become predictable. And I think we've seen that time and time again with other stocks in the market. So I think it's just how quickly it pumps. That's where it becomes easier for them, again, to trade it sideways with all that liquidity, because they know that everybody that's tracking AMC, right, wants to, like, they think that it's going to keep squeezing and squeezing until it just, you know what I mean? Like, that is kind of the mindset, I think, of a lot of people, and just kind of separating yourself from that a little bit is a good thing. and understand that certain stocks are going to behave a certain way compared to the ones that have higher volatility. These guys already know how the retail trader is going to behave with that. So treat them a little, treating them a little bit different is a good thing for sure. But that's why it's harder, right, to see more of these POIs happen right on AMC rather than just seeing smaller POIs happen along the way. We still track them at the end of the day because that is the window opportunity that we have seen, but it's definitely hasn't happened as much, right, as we've seen with other stocks. So yeah, just wanted to touch base on that. Cool stuff, man. So let's see. Yeah, let's talk about GME now, because GME is another reason why, man. So with GME, we've been tracking this one right here. This is the pattern that I've been tracking on GME, and it sets AMC to do some nasty things, man. If this POI is a positive one in the next few weeks, I think we'll find out very soon. Oh, that reminds me. I lost track of something I was going to say. I'll come back to GME real quick, but I lost track of what I was going to say on one thing. When you start a new cycle, looking at the weeks that AMC has ran in the past. So this is what I wanted to say where I lost track of what I was talking about. But this is where it started the new cycle, right, in 2020, or at least where we track it. AMC ran on November 9th, right? And it also ran in January and in May. Both times in January and May, it ran on a 4-day week, right? On a 4-day week. Now, this is obviously not something that we saw happen for the micro POIs or the smaller, we'll call them the smaller POIs that happened here. It's not something that we saw because I think the cycle we learned that here, is that the cycle had that in mind for these two, for the ones where they were going up. There's a lot of reasons, as to why that would be the case. But if this is a new cycle, we're tracking it based on the starting point of the split or that plus or minus 13-day window. That sets AMC up for next week, right? Where we do have that 4-day week, and it just kind of betters the outcome here, the probability of it doing something, whether it's soon, tomorrow, or next week, or whatever. But always, right, like you gotta take that all with a grain of salt, man, as Trey would say, because like that's just the that's the hard truth and reality of AMC. You gotta have that in, but look at all the different things that, how we saw them back on the last cycle, and there were two both times, right, in June and in January, where they did run on 4-day weeks. So that's interesting, definitely interesting to look at for sure. Okay, back to GME with that, because it's definitely a good thing. So GME, I think, is just it's had more upside. It also is one of the more profitable stocks in the entire market. If you look at, since 2020, GME is up there with like Sava and a few other stocks, Nvidia, really beating the markets like when it comes to return. AMC, unfortunately, is not, because of the dilution and the reverse split. But again, we're not tracking really the return over time. We're tracking the volatility points and the zones. And regardless of how you see it, the windows that we track are very consistent with GME and AMC. Like whether they're a week apart or even in that same month, where one gets a little bit more love than the other, they're around the same time. So one thing I'm tracking right now is this pattern. We've been tracking this since it got to this low, and it's been consistent in hitting all levels. You can see a nice cup here, a nice cup formation, which I think is doing it on the micro here is a nice little cup. This is your reaccumulation, so it's your projector, which does have it coming down in the next few days. But again, we're tracking a window here. AMC has not gone up the same way as GME over the last month, right? GME has gone up 50%. With AMC, that's not the case. So it kind of makes sense for GME to have a reaccumulation phase. You see a little bit of liquidity being dumped, and then this is where where AMC might have that that opportunity here to go up while GME is kind of just trading sideways or going up with it, right, as well. But yeah, very clear, guys. We got a reaccumulation phase. GME maybe doesn't get the same amount of love. Maybe it goes up 30% while AMC goes up, to the full extent, to the full amount. And yeah, this thing goes all the way up until February. Basically, it goes up to a range. Now, for the potential, I think I see more potential in the shorter term for AMC than I do for GME. And then you can see how with GME, it just kind of goes up in stages. It doesn't go up as quick. Why? Because it did that over here. And you go back, guys, to 2021, and it's the same thing that happened over here. GME had more love. It went down, and then it just traded in that same range. And in June, AMC had more love there, right? So they took turns. One goes up higher first. The other one follows it, not to the same extent. The one that has more love will trade in that same range. It already made the high, and then it will essentially could exit and go higher. But normally you're going to see the other one kind of outrun the one that had more love in the beginning, right? So just the same way I'm treating it. I think that GME had its turn. I still think it's going to go up, but I think that AMC will go up higher if these POIs end up being positive, right? Okay, one more thing here I want to touch base on, and that is the lovely market man SPY. Another thing that backs this whole bullish thesis out is what's happening with the markets right now, because they are advancing, they are going up. They could potentially squeeze here or enter a reaccumulation. I'm under the impression that we're probably going to be on a stop here, and I think that whether the markets go up and trade choppy and do something like this, I think they're going to be in a range. I think we're going to be like this for probably 2 years, and I'm using a few indicators that show that. But yeah, this usually happens, I mean, every 4 years we can kind of see it kind of follow the same thing. Now, it'd be a different story if we saw like a recession or something. With a recession, what you normally see, and if it's like a major one, you will probably see a major pump first. Because all the liquidity is being traded, everybody's buying this, and that, and then they want to come and bring it back down to an average, a macro average. So if we did see a recession, I don't think we would see it right here, where it just, or like a major market crash. I don't think we would see it right here. I think we would see a major pump first. So that'll be the signal for me. If the market is going to crash, that would be my signal. But it's behaving the same way that it did in 2021, where it's trading on a decent trajectory. Like it's definitely more inclined than what we've seen before. But it's pretty much the same as it was in 2021. So this is where you give the stocks that have been beat down, that have not crossed their highs, the opportunity to pump. Okay, every time we see that on AMC and GME, it has been when the markets are trailing up, but have not started to fall down, right? So AMC and GME squeezed right here, and they squeezed right here. Both times the markets had already crossed all-time highs, right? We crossed all-time highs right here, and yeah, before they came back down. So another thing to track, man, is that markets are trading at all-time highs, dude. Crazy stuff. Love it. Awesome. Echo, how's it going, man? Danny. All right, let's take a look at all-in-one intraday. Kind of look at some stocks there. Yeah, we had this week 2 POIs we talked about on the Discord, guys. 2 POIs, and I'll show you the other stock here. But we were looking at AI, and this one we've been tracking for 2 weeks now. Mara was one of them, and for this fake out, and then here on this is the crazy one, dude. This one on AI, and it blew through the roof, man. Up already like 50%. No, not 50%. From the bottom, maybe 50%. 35. Crazy stuff. But yeah, just man, these patterns, dude. Pattern trackings and the correlate. This one was on the sector, the tech disruptor sector, and that's the reason why I had it having a POI range here in November. Give it pretty much until the end of November to experience that volatility. And yeah, it had it here on Tuesday. So crazy stuff. Okay, so back here to this. The market average, dude. Got all these okay, cool. What's the market doing? I'm gonna assume this is MSTR. Yep. I got these colors engraved in my head, bro. There's pretty much every single set of stocks has a blue or like a purple, orange, whatever it is. So I already know like the blues. We got MSTR, Nikola, Peloton, Snow. Like, I mean, I'm trying to memorize these colors here and guess which one is doing what. This is SMCI. SMCI, dude, is one of crazy stock, man. But the way this one right here, the way this one dumped, I will say, and I'll say this for the long term, this is one of the first stocks that, so for example, like this one entered accumulation and reaccumulation before the markets were doing their thing. So it's kind of like projecting what the next accumulation period will be. But I think this one, you're going to see something where, I mean, it can go both ways. It'll stay in a range here, but it's entering what's going to be probably a long accumulation phase. But just look at like what Netflix did, you know, back in, and this is for like the long term, right? Just look at what like Netflix did before it ran, or even Tesla too. Like, I mean, Tesla's a big one. You look at all these stocks, and they had the same thing happen. I mean, they go through a very like a long pump phase, and then yeah, it takes years. Some do it a little bit differently. I think Netflix might be better to look at. For example, right here. I love this. So Netflix, again, did this, right? It was trading at $3 or whatever. This thing is trading at $3. This thing goes up to 43. Obviously, this went up higher, 125. Climbs all the way down, and then it does the accumulation phase, and then it ends up going higher. I mean, this is a stock that, you know, with AI and everything happening, NVIDIA, it's dumping, right? But essentially, in the long term, you probably will see a turnaround. It's just going to take time, you know, just like every stock we know. They pump, they dump, they trade sideways, and then they make their way back up. Like NVIDIA, dude, I don't think NVIDIA's done. I think a lot of it had earnings, and I don't think it's done. I think it's going to go up, actually, another quite a bit. Look at this. This right here is my projection. I'm saying this now, but this is my projection for NVIDIA. Pin this, dude. This is my projection for NVIDIA in the next few years, and this is based on, I'm taking a reference pattern that I'm using here. But basically what this is saying is, if we, like, why I agree with this is whatever way it does it, right? Whatever way it does it. So I agree that probably by 2026, we would enter another either distribution phase in the market, whatever it is, whether it's a recession or a crash or just another dip, another distribution. I think the peak will happen probably in 2026. I think 2 years is enough to have the markets trade sideways. Again, you're going to see the memes, you're going to see the small cap stocks pump first, and then after that, that's usually the signal that the markets would trade sideways. So when you see the markets trade sideways, there's not a lot of there's not as much opportunity there. That's the theta period on the macro charts for like leaps and stuff. But when everything starts pumping again, and hopefully in 2026, you can kind of see here that projection. And this is right here normally what you see with like a crash, because they pump everything like crazy and then they bring it back down. This is like what a crash would look like for like SPY, right? The scary thing though is that, well, NVIDIA is the largest shareholder, right? Or the largest stock on the the S&P. Now with it being a higher market cap than Apple. So that's the scary part, is that it definitely has the most amount of influence in the way that, like, SPY was like behaving really weird yesterday, right? Because of NVIDIA earnings. Just NVIDIA, man, by itself. So yeah, if it does this, I mean, the markets would probably behave very similarly to it. And then you kind of think like, dude, damn, like if this goes up to 500 and they bring it back down here, it's just coming back to the same range, but it's just a massive pump and dump in the market. And, you know, that's what they did back in 2020, man. And I say this, the 1920s is the only other time that we have seen that happen, just like that. Or you're in the 1970s, right? Because crypto's doing something. Well, crypto is, not gold, because that's when gold was approved for trading. This right here is the thing, man, about the 1920s, dude, is that, see how everything pumps? And it takes about 2 years, right? Everything's trading up here. Well, the markets are doing something like this. Let's see how long this took. Well, no, this is 10 years of data. That's a lot. But this is like the thing, man. Like, you think about it, and it's the after effect, really, that sucks. It's not right away. It's like you could say that's 2026, and then it does something like this where it pumps and dumps. But that's not the worst part, is like, because you just come back to basically the last 2 years of liquidity. It's the aftermath that is what's hit, right? It's 3 years of just downside for a while. And I think, I mean, it's almost inevitable for markets to do this, but and then they enter this like 20 years, I mean, of just trying to get back to those highs. I mean, that's a crazy thing to think about, but it's not out of the realm of possibilities, considering everything that's been going on just with everything, man. Like, it's definitely and why I'm bringing it up too, man, is because that's literally what you see when markets crash like that. You see a massive pump followed by a dump, and then like 3 years again of that recession there. Like, we're not talking 2008 or 2000. I mean, that was about a year where it just goes down. I mean, this is, you look at it for like 3 years, right? But yeah, I that would be the signal, right? That would be my signal. I don't think you would see a crash just happen like right away, right? Like that. Not enough liquidity is what I'm saying. Not enough liquidity, man. Okay, cool. All right, guys. Well, I'm happy you guys came in to chill. Chill it out here with the squad. If you guys want to be on top of all this stuff, again, we go over this every day on the Discord. We go live every day. You guys can click the link below. We'll take you there. It's called Trade Picks now. Trade Picks is a new server name for that. We got Platzi available. You can scan charts, use the reference patterns. That's how I do it. With a lot of these patterns that I have on AMC, they're all patterns that I found on the scanner with Platzi. And then as well as every other play, guys, everything else that we track. Again, the volatility that was experienced this week with Mara AI, things we talked about literally on Monday. And with Mara, we've been talking about, same with AI, we talked about it last week, but things that we talked about here on Monday before they happened, using the cycle, man, using these reference patterns that are just great, man, in the cycle. So check that out, like the link below, and I will see you guys on the next stream, hopefully soon, all right? All right, take it easy, guys. Bye-bye.